All right, what's up, family? Today we are going to be going over double C patterns and 3 of C patterns. Today is also Thanksgiving, so happy Thanksgiving to you all. So basically, these two patterns, they are pretty high on the profitability. I mean, like really high on the chances of them giving you a beautiful trade opportunity. Okay. So in today's educational, I'm going to basically be breaking down how y'all are going to be seeing them, how to identify them, and then just the overall understanding of what I mean when I say we have a double C trade or we have a 3 of C trade. So after today, you guys will have basically 5 strategies that I've given y'all that y'all can use to trade and look for opportunities and be effective in the markets. So previously this year, I dropped y'all a course over 3 separate strategies, right? So you have S1, S2, and S3. Okay, so you already have those which were dropped a few months ago, so you can use those as well. Those are going to be a little bit more complex when it comes to the market needing to build up that full structure. For example, S2 is built off of an ABC towards the upside and a 1, 2, 3, 4, 5 towards the downside. And you have 2 potential trade opportunities on that one. You could look to take 4 towards the downside into 5, or you're mainly just looking to take 5 towards the upside. So that's just to give y'all just a brief example of like S2. So y'all have that tutorial, but today we're going to go over the latest 2, which I found to be a little bit more probable. And also they happen a lot more frequently. So you'll be able to see these a lot more often. And that's going to be a double C trade and a 3 of C trade. So this is what they're going to look like. I'm going to show y'all some examples that we have been taking over the last few weeks so y'all can see in real-time perspective of how these will turn out. So we'll start off with the double C. These I have found to be around 90% on the accuracy rate. So if you see these are very high on the accuracy rate. Now the double C patterns, they can extend a lot further than the 3 of C patterns. 3 of C patterns are going to be a short-term trades. Double C patterns are going to be potentially a longer-term trade. Okay. So when you see a double C pattern, it is combined with 2 ABC structures. One, you're going to have a bigger structure, and then on that last wave, you're going to have a inner structure that is going to also print out an ABC as well. This is when you would get a combined double C, okay, 2 C's. So that is where you get a double C structure. So this is exactly how it would look, whether it's going to be bullish or whether it's going to be bearish. You're going to always have a bigger structure ABC, and then at the leading to ending this structure, you're going to have an inner ABC. Okay, that is going to be, this bigger structure is going to be your first confirmation. This inner structure is going to be your second confirmation. So it's 2 structural confirmations in one. That is a double C. When you have a 3 of C, this is when you're going to have an A, B, C, and the C is going to align at the same place of 3. This is when you have a 3 of C. Okay, so on this one, I'm going to show you the difference on the target points of what I was saying, how these would be long-term, these would be short-term. So you guys should already know the areas that we target when it comes to ABC patterns and 1, 2, 3, 4, 5 patterns. If not, I'm going to go ahead and briefly go over it for you guys again. So here is your ABC and your 1, 2, 3, 4, 5, right? So on ABC patterns, our first target is going to always be in the B structure area. And we never, ever, ever target the end of B, ever. You never target the end of the waves. You always want to look before the end of the wave, look for something significant before the end of the wave, somewhere around in this area, fair value gaps, imbalances, maybe a gap in the market, order blocks, equal lows, liquidity. Look for something in this area, but do not target the end of this wave. You never target the ends, okay? And the secondary target for an ABC is going to be at the original start of the wave A. Okay, so for those of y'all that also do not know, I did just drop y'all an educational that went over this, but when it comes to an ABC pattern, This wave is A. This is A. This wave is B. B is a corrective wave. This wave is C. That is a impulsive wave. This is an impulsive wave. So A is impulsive, B is corrective, C is impulsive. Okay. So target points, y'all have the target points. These are our typical TP1, TP2. There is a 90% chance that TP1 will hit for B. It does not need to go to this area. So I rarely ever target this area unless something calls for it. Okay. But you can always target the B structure for about a 90% chance that it will potentially hit. Okay. So that is your target points on ABCs. When it comes to 1, 2, 3, 4, 5s, your TP is going to be, first target is going to be 4. Second target is going to be 2. I never target after 2. That's just me personally. And the same thing applies for the ABC pattern as it does for the 1, 2, 3, 4, 5 patterns. You never target the end of the wave. You look for something significant before the wave is about to end, and then you look to target that area. Okay, so now that we have the target points established, we know that TP1 is going to be B for ABCs, right? So you have your first B right here, but we also have 2 Bs. In both of these structures, this is going to be TP1 for both structures. So they both will get hit, okay? So of course, this one's going to get hit first, and you might see a reaction off of this just for it to continue down and finish up and hit the final structure, okay? If not, then it's just going to go straight down and hit the final structure. Typically, that is about majority of the time what is going to happen, which I'll show y'all, real-time examples, and we'll see how these kind of work out, right? So that is your full target points and how you would target a double C structure. Now, when it comes to a 3 of C, we are only able to target around this area. It gets risky when you target B on this one, and I'm going to show you why. So when it comes to a 3 of C, we don't necessarily know if it's going to be a 1, 2, 3, 4, 5, or if it's going to be an ABC structure. Okay. So with that being said, you don't want to try to target too far down here just for it to actually come to this point and then go back towards the upside. Okay. And when you see a 3 of C structure, it's also depending on how far up you're expecting price action to go as well. So you're always having based off of previous structure, right? So if we look left, we're always having something like, so let's say if the market was coming down like this, right? So we always have something on the left that's maybe showing us maybe why it wants to come up, like maybe liquidity right here, or let's say something else significant that we're targeting in this range, right? So we always want to look previously towards the left to make sure that we have a full understanding of what could potentially happen towards the right. But outside of that, you want to have reasoning of why you expect it to go further up as well, right? And that you would get again from looking towards the left. But these are going to be a 3 of C, and you generally only target to this level because you don't know if it's going to extend further down or go back up. So your safe target for these are going to be in this range. My favorite trades to take are going to be the double C trades. And that's just because you get a lot of confluence in that last wave. You get a lot of confluence. Now you can also look for trades that have structures like this as well. And my favorites are always going to be the ABC structures, just because they're very clear for you guys to see. Okay. And then in that last wave of C, if you're able to get a 1, 2, 3, 4, 5, then that is extra confluence for you to look to trade for the downside movement into this range. So you can potentially call this a C of 5 or a 5C, which can also give you another beautiful opportunity, just as beautiful as the 3 of C. So for this one, you'd be looking to target this, and then ultimately it would have to achieve in this range because you're targeting B, right? So from the original wave up, this is TP1. So yes, we have an inner structure that's giving you your intra time frame TPs, but the bigger structure is mainly where you're targeting for your TP. So always remember that on this scenario, this bigger structure is mainly where you're targeting for your TP, but this inner structure is where you're going to get your target 1. Okay, so you have 2 targets that will 90% chance hit on both. Cool. So that is your double C and your 3 of C's, and then you guys have your new one, which is going to be a 5C. Cool. These two right here are going to be most likely your highest probable trades. If you can catch these all day, like I would literally, like this week, I've just been waiting on these trades and they've all hit TP. Every single one of them have went towards the target. If I've either missed them or they were already like going. So I'll show y'all examples as we go through these of all of the ones that are going, how we missed them, if we missed them, etc., etc. Okay, so these are it. Now let's go to kind of the real-time examples. So let's clear this up. So this here was a double C trade on gold. You see how we have the bigger structure ABC towards the downside, and then you see how we have this final ending structure ABC on that last leg, right? So boom, look at the reaction. First target point was here on B. On the inner structure, it was completely annihilated. Second and overall target structure was here. It was completely taken out, and then we got the decline out of that area, okay? So on the way up, look how we built another ABC structure. It then declined out of this B into this range. Usually when you get to B, there's a high chance that you're going to get some type of reaction out of B, right? It doesn't always mean that it needs to be long-term. So for example, look how as soon as it got to B, it gave us maybe like a 200-300 pip push up, then it came right back down. But nonetheless, you got a reaction out of B. And I actually do expect this to head a little bit further back up to build a inner structure ABC because of the fact that it did not annihilate this low and it's starting to hold for a higher low. So potentially higher highs and higher lows, guys, are also basically printing ABC structures, okay? What is that? It's a higher high, right? But it's also an ABC structure. So if it continues up for another higher high, what is that? That's a 1, 2, 3, 4, 5. So they are also still printing out this. So when you're doing waves, you're identifying market structure and all of this. So right now we're looking at it from a wave perspective, but we're also acknowledging the fact that we failed to make a new low, and we have now established a higher low, and now we are potentially going for a new higher high, right? So that's just to break that down in a little real-time example here for y'all. Let's look at some more examples. So again, this is a double C. Okay, so this is how the double C played out beautifully, straight to it, impulsive. I mean, this was like 1,500 pips, insane. And if I'm not mistaken, it happened all in 1 week. Yeah, it happened all in 1 week, damn near. So that is one example there. Let's look at another example. We had CHFJPY, which is another example, and we are looking to capitalize again off of this trade. So this is a double C trade, okay? You see how we had the bigger structure ABC? So that's the bigger structure ABC, right? And then we had the final wave inside of C, the ABC inside of that wave. That produced a double C. You see how we look left and we got the double C inside of the order block area, looking left for confluence. So when I was giving y'all that example earlier on how you can kind of look left to kind of figure out what's going on or where, you know, potentially things might go as well in confluence with price action, this is one of those examples to where you want to look left to kind of get a perspective of why you're expecting it to go maybe to a certain area or not, right? On top of using your Fibonacci extensions, of course, that's going to let you know where the actual ABCs or 1, 2, 3, 4, 5s are actually going to go. But we don't just trade off of Elliott waves, right? We use our 4 or 5 steps, which y'all should know the 5 steps from previous education. But if not, I'm going to go ahead and review them now. So step 1 is always going to be market structure. Step two is going to be wave count. When I say market structure, you're getting a general bias of what the market is doing. Are you in a bullish market? Are you in a bearish market? Literally that simple. Is the market going up? Is it going down? Is it making higher highs? Is it making higher lows? Lower lows, lower highs, or like what is it actually doing, right? And you want to do that from a kind of a zoomed out perspective. Right now we're on the daily, so that's fine. We can see that in this course, we're in a bullish market. We can see right now in the course, we're in a bearish market, right? So something is just that simple as step 1. Step 2 is going to be your wave count. So we've already have wave counts on the chart. So we've already done our Elliott wave analysis, and we have reasoning of why the structure can do what we expect it to do. So that's boom, step 2, that's simple. Step 3 is going to be liquidity. You do not always need step 3 It is optional, but if you're able to find liquidity resting in your trade opportunity, then that's just great. For example, in this area, liquidity was going to be resting at this red line, which, as you can see, it didn't go all the way up to take liquidity. It just went to respect the order block and then drop. So 3, you don't always have to have liquidity, but if you do have liquidity in your area of interest, it is good to take in mind. Step 4 is going to be imbalance. Imbalance is going to be a category of its own. Inside that category, I mainly like to put fair value gaps and order blocks. So those are going to be the 2 that I mainly put inside of imbalance. So as you can see, we came right up into the order block, and then we got the rejection out. So again, that's step 4. So we have now all 4 checked off. The last thing is going to be always step 5, and that's going to be reversal pattern, right? So that's when you see me put on the chart this box, and it's going to say area of interest, look for a reversal pattern. So here I can see that I'm not going to zoom in right now and change the time frame, but you can see that we had a double top right here, that up, that down, that up, that down. So that's that double top. And if you don't even want to look at it from a double top, we got a head and shoulders right here, left shoulder, head, right shoulder, and the movement towards the downside. So those are all 5 steps that you can see that happened in real time in your area of interest. So when you're analyzing, you're still going to be using the same 5 key steps to get you to your final, destination of when you're wanting to go ahead and enter the market and make that decision. But overall, the double C is going to be a beautiful opportunity for y'all. And the way I teach y'all how to trade, this stuff you can use even with your own styles, in Confluence. If you want to pick up fully my style, then of course that's great, right? But you can also use these things on top of your style, right? So you might not want to key in on my 5 steps necessarily, which honestly the 5 steps are I would not miss those at all. But if you have your own strategy and it works for you, then the main thing you want to do is focus on the Elliott waves, because this is what's going to give you your directional bias. This is what's going to give you market structure. Everything else you just add on top like icing on the cake. So anything that you use personally, that's when you put that on top of it, right? So if you don't want to incorporate my full trading style, which is going to be then breaking down the 5 steps and other things that I teach you, then you can just incorporate the Elliott waves, which is going to give you the full market structure, the areas that you actually even need to be looking in the market for an actual reaction to make a trade. And then from there, you put your own things on top, if that makes sense. So as you can see, me breaking down the 5-step strategy, it all aligned in this area to fully take the trade towards the downside. And we're just breaking this down as it goes down. We already know that take profit 1 for a double C is going to be here, which any ABC, it's going to be, right before you in B, but in that B area, right? And then what is the target 2? In this range, which I already have the box. So as you can see, it's already killed TP1. So the reasoning of why we're expecting it to go further down is because it has not killed the TP1 for the bigger structure. So that is why we are going to be looking for a retracement in a very good area for a continuation towards the downside. And we do want it to also respect structure. So you don't want to really see any key highs being broken, right? So you want it to hold structure as far as whether it's a lower, we want it to hold that bearish structure. So that's going to be reasoning why you also don't want to see price action potentially breaking too high or, getting up into this range, because then it's going to make a new higher high, and we don't want it shifting structure, right? We also have broken below the 200, which has now shifted us into a bearish market. So we want it to hold that bearish structure. So reasoning, we're looking for a break and retest and potentially in this area as well. We have the overall area highlighted as a full break and retest, right? But we also have this area of previous price action, which we're going to grab the early entry here of a break and retest. And then we have the fair value gap right here that we're looking to target for our full entry point as well. So that is the full breakdown on CHFJPY and why we're looking for the entry there and why we are looking for further continuation towards the downside. So another real-time example for y'all. We also do have, I think, Euro JPY, which was a double C scenario. As y'all can see, these double C's have been playing out very beautiful. Some of them have fully finished structure. Some of them still have more to go. So this Euro JPY double C, as you can see, target 1, we already know is in that B area. Look how it came right to that target 1 B area and then gave you this reaction right here all the way to push back up just to continue back towards the downside to finish up into B. So how I was just telling y'all, I will show y'all an example how we would potentially tap into that first area, make a pullback, and then continue down to the secondary area because we're not finished fully tapping both of the structures. That's that example, okay? So you tap one area, you could potentially get a reaction off of B, but don't expect it to be too much. And once you tap into that first B on a double C, you don't really expect it at all. It should not at all come back up to invalidate the high of C. So once it starts to break down and get into that area, it's kind of locked in, right? So it should not come back up here at all, or you're probably looking for a new high or a new trend. And this might end up not being a double C, but this might be a scenario where it ends up turning into a 3 of C. So that's those scenarios where you can potentially expect it to go back towards the upside and go up. So you don't want to take it too far down. So that's if we got a 3 of C scenario. But the double C was what clarified that we were going to be able to get a longer term trade. Remember, I was telling y'all that the double C's would give you a longer outcome and more profit, right? Versus the 3 of C is kind of short term, short lived. You just kind of want to get in and out. Versus those double C's, you can actually swing those, hold those for a nice, good amount of movement towards, the direction. So let me see. I think that's all the actual. I know we had a lot of examples on these JPY pairs this week. Let me see if there's any other. I'm trying to remember now if there were any other pairs that had the double C or 3 of C scenarios. Okay, so GJ had a double C as well, and this has been breaking down pretty nice. So I'm actually glad we went to DJ because I'm seeing now that there is a thing as a triple C. So I'm going to show y'all that we missed GJ and it's heartbroken. So let's break down GJ. So as we can see, we have a bigger structure ABC. We didn't make a new low, right? So it's going for that's still going for that ABC structure, right? So if this would have made a new low, that's not an ABC, right? So it has to make, it has to move like this for it to be an ABC. So that is your ABC for the bigger structure. And then if you look on the inner structure, you see we made a inner structure. Remember, I always grab the key levels, right? So I grab the high, the low, and then the high. So that is your full ABC. And that turned out to be a double C, right? So both of these, we took measurements from this area, from these ABCs, and we took measurements from these ABCs to get the overall area of interest, that full box of why we're looking for it to react in that area, right? And then movement towards the downside off of that. So first target is just now been hit on GJ. We still have a lot more movement towards the downside on GJ. So what that means is, like we just showed y'all in another example, when that first B gets hit, it's okay for us to make a reaction out of that area, right? But don't expect it to be long term. You definitely don't expect it to go all the way back up here before it actually comes down here and taps into this range. So it will come and hit into this range before it actually goes back up or starts to change the trend, go to a different direction, or do whatever else it wants to do. It's going to hit this range first because it has complete TP1 here and TP1 here. Cool. So if I break this down on the lower time frame structure, you'll see that we're starting to get a lot of confluence and movements in this area. So we're expecting a 1, 2, 3, 4, 5 because we need something long term to get us all the way down here, right? Because we know it's going down here. So we're not looking for anything short term bias in this area. So I wouldn't be looking for an ABC in this area. Instead, I'd be looking for a 1, 2, 3, 4, 5. I need something that's going to say that it's going to go further back down, right? And what's going to be further back down? A 1, 2, 3, 4, 5. If it's an ABC, that means it's going to go all the way back up here towards those highs. We don't expect that, right? Because that just can't happen. If we're right, it can't happen. Now, if we're wrong, it can happen. But if we're right, it can't happen. So if we are right and we're trusting our analysis, then that's not something we're even looking to expect to happen, right? So with that being said, right now what we're looking for is a pullback to form a 4 and then for another wave down to continue towards the downside. So on this movement down, we got a double C right here. So this is the buy that I just gave out to all of the team this week, and we literally fucking missed it by 1 or 2 pips, just a few pips, man. If y'all can see this right here, I just zoomed in. So we literally missed it by a hair, and it shot up. These double C's are very high probable. I've just started working with them maybe the last like 2 months, but they are very high probable, y'all. And I've actually been so like loving them that I've been patient on my trading till I've been only trying to take them if I can just find them, which they are very easy to see. So for example, this week, 6 or 7 of them popped up. And so much happened to where we either missed a trade, like, or it's already going, right? So for example, we already either made money off of it a few weeks ago. So like a lot of these, for example, GJ at the top, this was something that was a few weeks ago, right? From the double C. EJ, the double C was a few weeks ago. We also took a continuation trade right here last week to take us into the first, what was it? Was the first B or second B right here? One second. Okay. So, it's literally either we missed it or we caught it maybe the previous week before, but these have been crazy. This week, GJ, we literally missed the double C on this one. So this, I'm just looking for something short term and then that continuation down. Let me see if there's any other examples. We might be pretty much fully done. I don't want to overcomplicate things. I do just want to show y'all real-time examples of how this stuff kind of breaks down so y'all can see it. So you can see here the inner ABC. On that last leg of C, we got the overall bigger ABC, and then we got the movement out of it, man. So I've just been kind of being patient this week, waiting on just taking these trades. I did get a little bit off of gold this week on that on the buy out of this range. So it did come back down right here. I took partials literally up here, came back down, closed me out of entry. Glad I took partials. And then it shot back up. Crazy. But yeah, man, these trades are been very solid. Do we have one on your odd? No, we just have a normal ABC structure on your odd, which turned out pretty solid. Tap back into B. You see how we got that reaction out of B. A lot of times you're going to get some type of reaction out of B. Even if it wants to continue back up, you're just going to get some type of reaction out of B. I think Euro USD, we had some structures on this one previously as well. So this one, we had that structure. Remember how I was showing y'all which we could have a 5C. So we ended up, this one caught us out last week. We thought it was going to be a double C, which was here, right? So we thought it was going to go for a ABC at this point. But it went for so we thought it was going to be a double C, right? But it went for a 5 of C. So regardless, the movement is what we key in on. And the direction that these waves are telling you, they'll tell you where the market should go. So from there, you put 2 and 2 together to get the full, vision. And the more patient you are, the more likely you are to succeed. So even if we took this trade, right? So this would have turned out, as we were taking the trade, it would have turned out as a 3 of C at that point as well. So you could have been looking for a double C or a 3 of C, but you see how it came short-lived and ended up going for a 4 and then back down. So it started off as a 3 of C and turned it into that, that full vision. So this right now, what I am going over is literally like masterclass Elliott waves, as I'm starting to tell y'all how this stuff will change and shift. I know this can be confusing. It took me a very long time to really just understand Elliott waves and get to this point, like literally 3 years out of my, like the last 3 years out of my trading career. I've been using Elliott waves, and I would say the last 2 years I've been kind of like focusing on them heavy. So, some people are fast learners, but it took me 2-3 years of really like dialing in on this to really understand where they should be placed, what could potentially happen, how the market movement usually looks when they show up. So the more you play with them, the more you'll understand how the market will show them, right? So you'll understand more how they should look, the different scenarios that they'll pop up in, and just et cetera, et cetera. So one thing I was telling y'all is when you usually get a far extension away from like A, usually C's come close to A, right? So when C's come close to A, you usually get them close, right? And then you expect to push back up. But when you get something like this, it's usually almost a sign that it's going to go, and I haven't updated this one yet because we're not taking this trade this week, but it's usually a sign that it's going to go for something like a 1, 2, 3, 4, 5. So it's things like that that over time, as you train your eye, you get to realize kind of what's really going on. But the best thing to do is just put them both on the chart, right? So that way you keep your mind open that they both could potentially happen. And what you could be looking at is a 3 of C. And that's when you keep your mind open to other possibilities. So that's pretty much all I have for y'all today, man. Just wanted to explain to y'all how these work. Again, the most probable ones that I look for are going to be the double C and just basically if you focus on the 2 towards the left, which is going to be the double C and the 5 C's, these are the easiest to see. And these are your highest probable ones when it comes to the outcomes. I would say these are like 90%, and then you would look at this to be like 80, 85%, but it's short term. These are both long term, and they're highly confirmed because you can see the inner last wave confirming the full movement of the actual bigger picture. So this one as well, inner last wave confirming the full move of the bigger picture. When you look at the 3 of C's, it doesn't necessarily have the inner last wave pictured. You're looking at the more so both bigger structure pictures, right? So when you're looking at a 3 of C, you're mainly focusing on both bigger picture structures. Now, if you're able to break this last structure down, then you're probably not going to even be looking for a 3 of C, because you're probably going to be focusing on whatever this structure says, if you can see it. If you cannot see the last structure or the last, the structure within the last movement of this, do not try to guess it. Just keep your mind fully open of any possibilities that can happen. Okay. All right, guys. Appreciate y'all for tuning in. I hope y'all learned something from today. Of course, if y'all have any questions, y'all can always send me messages or post in the mentoring chat room those questions, and we can break them down together as a team. The best way for y'all to understand and learn this stuff, guys, is not being scared to actually try it and put it on the chart. Like, nobody's gonna give you a whooping or put you in timeout because you put something in the wrong area, or like, you're not gonna get in trouble, guys. We're all grown, so it's not like you're gonna get in trouble for trying, or actually trying to put yourself to the next level and just actually caring, because most people don't even try. They'll read the education, they'll watch the video, they'll hear me say the examples, but they never actually go to a chart and practice this and actually put in the work to actually learn it, right? So get on your charts, y'all. Practice it, put it in different areas, play with it, look to see what makes sense, what doesn't make sense. And that's the way you're going to learn, is by literally putting it on your chart and by trial and error, literally. So my job as a mentor is to try to help y'all make as many, or I'm sorry, not as many, but as least errors as possible, right? Just kind of minimize y'all's errors on y'all's journey, but you're still going to make errors as you're practicing until you get it down yourself. And even then, you still will make errors. I still make errors. It's just once you get good with it, you make less errors, right? And you're more on the profitable side. And so that's what matters, is less errors, more profit, right? And so in the long run, you'll be a better, more profitable trader. So appreciate y'all, man. Y'all have a great rest of y'all's day. Again, happy Thanksgiving. I just want to hop on and go ahead and make this recording for y'all and actually release it for y'all today as a kind of a little Thanksgiving little gift for y'all as well. So have a great day, guys.